The wireless telecommunication industry in Canada is dominated by three major telecom companies, BCE, or better known as Bell, Rogers, and Telus. These three major telecom has around 90% of the overall Canadian market share. There are two more noticeable telecom companies in Canada, Quebecor and Shaw. Quebecor currently only offers its service in Quebec and therefore only contains a small percent of the overall Canadian market share at around 4%. Shaw, on the other hand, only has recently gotten into the wireless industry with its purchase of Wind Mobile back in December of 2015, and since then has rebranded it as Freedom Mobile. But Wind Mobile was founded back in 2008, and as of now, Freedom Mobile has around 5% of the overall Canadian market share. So in today's video, I want to go over the 5 publicly traded telecommunication companies here in Canada. But before we begin, I just want to say these are just my own personal opinions. I'm not a financial advisor, so please do your own due diligence before investing. Also, before we begin, if you find this video informing or if you learned something valuable from this video, I would really appreciate it if you would like and share this video. It really helps me and this channel out. First up, when we look at the revenue numbers, they are all growing over the years. Yes, we do notice a few hiccups along the way, just like with Bell back in 2002 and 2003. I'm not sure what caused the drop back then. Maybe they sold off some assets which contributed to the revenue numbers, but it was pretty far back, and the older the data point, the less relevant it is compared to the more recent data points. Shaw and Quebecor also saw their revenue numbers dip significantly back in 2014, but it was caused by the sale of some of their assets, so not a big deal there. But we do notice Rogers had flat revenue growth in 2019, where everyone else grew the revenue numbers by a few percent, but overall they are all trending up. When we take a look at the revenue growth over the years, not quite as consistent as we like, quite a few spikes over the years. But if we take a look at the more recent decade, we can see significant drop in revenue for Shaw and Quebecor back in 2014. But maybe we should ignore this data point, since it was caused by the sale of some of their assets. If we ignore this data point, we can see that Shaw actually has one of the higher revenue growth out of the group, especially in the recent 5 years, when they acquired Wind Mobile. In second place, I would give it to Telus. They have grown their revenue numbers very consistently over the past decade at an average of just under 5%. Next, I would say Bell and Rogers are fairly tied in their revenue growth at probably an average of about 3%, but I would give the edge to Bell since Rogers did fairly poorly last year with their flat revenue growth and is currently on pace to having the most significant decline in revenue this year compared to the group. And in last place would be Quebecor with their lowest growth with an average of probably around 2%. When we look at their net income in the 90s and the 2000s, it's been fairly volatile, but the recent decade much more stable. A few points I would like to point out: the drop in net income for Rogers back in 2016 was due to their decision to discontinue developing their internet protocol television and decide to go with the Comcast product, and also some restructuring costs. Another point I would like to point out is the drop in income for Shaw back in 2018 wasn't mainly due to them restructuring the company, but overall in the past decade, Bell and Telus has the best trend as they've been slowly growing their net income over the years. Quebecor a little hard to say, since back in 2013 and 2014 they did sell off some of their assets. I'm not sure how much that affected their net income, but if we were to ignore those few data points, they've been growing their income over the years as well. I also took a look at their net income growth, and just because their income is pretty volatile, there's not much useful information I can gather from it. When it comes to the number of shares outstanding, I'm going to have to give the edge to Telus, Rogers, and Quebecor, as they have either reduced the number of shares outstanding over the past decade or have kept it fairly flat. Bell and Shaw, on the other hand, has been slowly issuing out more and more shares, but we can notice that Shaw has reduced it slightly this year, and they have received approval from the Toronto Stock Exchange to be able to repurchase back around 5% of the outstanding Class B shares within the 1-year period. The profit margin for this industry seems to be around the 40 to 45% range. We can see that Bell, which is a much more mature company, has been very consistent around the 40% mark. Rogers and Quebecor started off much lower, but has trended upwards towards the 40 to 45% range. Shaw started off as cable TV and home internet provider, which I guess had higher profit margins since their margins are higher among the group, but has slipped back down a bit when they got into the wireless telecommunication business as well. Telus, on the other hand, is a little weirder as their profit margin has been trending down, but is trending back up to the norm now. I also want to take a look at the capital expenditure as a percentage of their revenue. And right away we can see that in the past, they had to spend a much larger percentage of their revenue to help build out their infrastructure. But after that, it has come back down, and the recent few decades has been much more consistent. Bell and Rogers has been very consistent with each other at around 16 to 18% of the revenue numbers. Quebecor, on the other hand, a little bit more volatile, but overall a lower percentage. Maybe it's because they only operate in Quebec, and the province of Quebec has the second highest population in Canada and contains just under a quarter of Canada's population. The denser the population, the more you can save on infrastructure. Telus and Shaw, on the other hand, spend much more on capital expenditure. Telus is a pretty big player when it comes to home internet in British Columbia. Maybe the cost to build out this network is slightly higher, and that's why Shaw and Telus spends more on capital expenditure. But we really see a big spike up in Shaw in the recent few years, but that's probably due to them building up their wireless infrastructure for Freedom Mobile. When looking at their yearly dividend, we can see a few dividend cuts in the past. Bell cut their dividend back in 2008, and Telus back in 2001 and 2002. But besides that, they have all grown their dividends a lot over the years. Bell and Telus' yearly dividend increases has been very consistent the past decade. Rogers has kept their dividend flat back in 2016 and has only started growing again recently in 2019. And we should note that their growth last year was flat, and this year it's on pace to be down pretty significantly. But since their payout ratio is much lower, they should still be okay supporting the dividend increase. Shaw, on the other hand, since they acquired Wind Mobile, they haven't increased their dividends, but that's understandable, since they are focusing on using their funds to build out their infrastructure. Quebecor, on the other hand, pays a very small percentage of the income back to their shareholders, but I guess they don't have much use for the funds right now because they have been wrapping up their dividend payment and growing it very significantly in the recent few years. We can see it clearly when we look at their dividend growth. It just dwarfs all the others, but that's because they started off a very low base. But majority of the others has had a very nice annualized dividend growth over the years as well. You got Telus hovering around 7 to 8%, Bell around 5%, and Rogers starting to ramp back up again as they start paying out more of their profits back to their shareholders. Shaw, on the other hand, has been fairly poor in the past decade, but like I said, they are building out their wireless infrastructure, and that comes at an expense of no dividend growth. But once they are done, we should start seeing them reinvigorate their dividend growth again. Sometimes I prefer to look at their yearly dividend growth over their annualized, and we see in the past we had times of massive dividend growth, and in the more recent decade has been much more stable as the company matures. We can ignore Quebecor since they are currently in a phase of a massive dividend growth, and I expect that to continue till they reach a more reasonable payout ratio. But we can see exactly what I emphasized earlier, very stable dividend growth in Telus and Bell. Rogers, on the other hand, started back on a dividend growth trend, but we'll see if they can maintain it. Shaw, on the other hand, no dividend growth in the past several years, and probably won't be any till they are done with their big investment into Freedom Mobile. But recently, they did start their share buyback, so I'm hopeful that soon we'll see them growing their dividends again. When looking at their payout ratio, a few outlier points, especially with Shaw back in 2018 with their restructuring. But here we can see that Quebecor has a very low historical payout ratio and has only recently started paying out more of their income back to their shareholders, where all the others has been trending up and paying more and more of the profits back to shareholders. But we are reaching our limits, especially with Bell paying out more than 90% of their earnings. Telus is just below 80%, hopefully they'll keep it within the 70 to 80% range, and not follow Bell into the 90s. Rogers, on the other hand, has typically kept their payout ratio in the 50% range, besides the hiccup in 2016, but it looks like they are planning to increasing that ratio since they are increasing their dividends without an increase in net income. We'll see just how high they plan on taking it over the years. Shaw, on the other hand, has been typically within the 60 to 70% range, but since they bought out Wind Mobile and sold off some of their assets and started investing into the wireless infrastructure, their net income has taken a hit, and therefore they have stopped their dividend growth, but overall their payout ratio has gone up because their net income has come down. But hopefully over time, when the majority of the investment is done, they are able to reap the benefits and their payout ratio will come back down to their typical range and they'll be able to finally start growing their dividends again. Surprisingly, when looking at their stock performance, Quebecor has done the best by far, about 2 times the performance of Telus, which is then about 2 times the performance of Bell and Rogers, which are fairly tied with each other, and lastly with Shaw at the bottom with pretty much a flat return over the decade. Their annualized return is exactly what we'd expect, but one thing I would like to note is that Rogers has done better than Bell in the past, but has performed very poorly in the recent few years, which has really dragged their performance down. We can see this more clearly when we look at the yearly return chart. Back in 2015 to 2018, Rogers has performed better than Bell, but in 2019, they really underperformed with their flat growth. And lastly, I want to look at their historical PE ratio. I removed a few of the outlier points to make it a little more pleasing to look at, just in case if you notice some breaks in the trend lines. But overall, we can see that Bell and Telus' PE ratio has gone up during the pandemic. Rogers and Shaw has stayed relatively flat. Quebecor, on the other hand, has actually gone down during the past few years and is trading at the cheapest valuation compared to the rest. So in my personal opinion, which one do I like? First, I would like to go over the two with the higher PE ratio, BCE or Bell and Telus, which trades at a PE ratio of around 22.5 and 23.5 respectively. When it comes to revenue growth, Telus wins, hands down. Bell has been barely able to grow the revenue numbers past inflation. We can naturally expect prices to go up because of inflation. So even if we assume they don't gain or lose any customers and everything else stays the same, we should expect the revenue numbers to go up at around the same rate as inflation. And we can see that in Bell's case, they are barely able to keep up with inflation. There just doesn't seem to be much growth left in the company at their current stage. And if you're not growing, I don't expect your stock price to appreciate much either. Telus, on the other hand, is valued just slightly higher, but they are growing and has one of the better revenue growth out of the group. They are currently on pace to having a decent revenue growth this year during the pandemic, where the other two big players, Bell and Rogers, their revenue numbers are down. Shaw and Quebecor, flat, and on top of that, besides Quebecor, they have the highest dividend growth out of the group and are on track to maintaining that lead. So in my opinion, definitely Telus over Bell. And on top of that, I like that Telus has diversified into healthcare back in 2018 and is currently Canada's largest digital healthcare, which connects patients with doctors, especially with this ongoing pandemic, which has accelerated its adoption rate. Next, I want to compare Rogers and Shaw trading at a PE ratio of just under 19 and 18 respectively. Rogers has had a pretty bad year in 2019 with flat revenue growth and are on track to performing the worst this year as well. Shaw, on the other hand, didn't do that well last year either and had pretty flat revenue growth as well. In general, the entire industry had pretty poor growth in 2019, but even if we look further back, Shaw has seen higher revenue growth than Rogers, but they are starting at a lower base since they are a smaller company. And when we look at their dividend growth, both have done pretty poorly the past few years. But it looks like Rogers plans to start growing their dividends again by paying out a larger portion of their income back to shareholders, where Shaw has been reinvesting their income back into building out their wireless business. But we did recently see an announcement regarding Shaw's stock repurchase program, and they have been approved to buy back about 5% of the outstanding shares within a year. So we may see them starting to grow their dividends in the near future. So in my personal opinion, I would probably choose Shaw over Rogers because of the higher growth and the potential for them to take market share from the big three, as Shaw becomes a larger player in the wireless space. And lastly, Quebecor, priced the cheapest at a PE ratio of about 14. They don't have the best revenue growth, but definitely not the worst. They are a smaller player when you compare it to the big three, but that's because they only operate in Quebec. But in Quebec, they are a fairly big player. They have recently really started ramping up their dividend growth and started paying out more of their income back to shareholders. Maybe they have reached their capacity in Quebec and don't see much growth going forward, so they decided to start increasing their dividends and distributing their income back to their shareholders. They may be the cheapest out of the group with the best stock performance, but going forward, if the company doesn't expand out of Quebec, they may not see much growth in the future years. And that's the main reasoning putting me off from selecting this as one of my picks. So in general, in my own personal opinion, my two top picks would be Telus and Shaw. I prefer Telus over Bell and Rogers. Yes, Telus does trade at a higher valuation, but we are actually seeing growth there, and I like that they have diversified into healthcare as well, especially with the ongoing pandemic, as really accelerated the digital healthcare adoption rate. And this segment could be the potential future driver of growth going forward, as the wireless segment of their business is pretty mature and pretty saturated. I also like Shaw as a slightly cheaper play, as they are the 4th largest wireless mobile provider in Canada, but with only a market share of about 5%. They have invested a lot into this industry, and this could be their future driver of growth going forward. And as always, if you found this video informing or if you learned something valuable, please like and share the video. I really appreciate it because making this video does take a lot of time and it really helps out this channel. And if you haven't subscribed yet, please make sure to smash the subscribe button, and thank you for watching. I'll see you in the next video.